So as I mentioned, our focus today is what to expect on your next renewal. And 2020 has been a year of major change in the insurance industry and insurance market. But even before the onset of COVID-19, we were seeing double-digit percentage rate increases in certain lines of coverage. With the addition of coronavirus-related effects on carrier loss ratios and investment portfolios, as well as other factors which we will discuss today, the current state of the market is best described as turbulent. We are seeing significant renewal rate increases, reductions in the limits of coverage offered on renewal, and the addition of coverage restrictions and limitations. While pricing will ease at some point in the future, we can't see in a foreseeable future, which I'll call the next 6 months, we don't foresee any real change.
As Craig mentioned, there are going to be stricter underwriting guidelines going forward. The underwriters are going to take a closer look at everything. They're also going to require additional information that you may not be used to being submitted, such as a COVID-19 questionnaire. Also, if you have outstanding loss control recommendations with your carrier, I'm quite sure they're going to be requiring compliance this year. So for example, if you're a building owner and the insurance company has been recommending that you update your sprinkler system, they're not going to let you off the hook this year. So be careful with that. They could also use that as a basis of non-renewal, and that's the last thing you want. So take care of those items. Excuse me. Also, start your renewal early and provide underwriting information back promptly. For our current clients that are on the phone, we will be starting the renewal very early this year, and we want to make sure that we get the information back from you so that we can put together a prime submission so that it goes on the top of the underwriter's pile. They're going to be inundated with submissions, so we want yours to be at the top.
Last year, the market changed starting in the first and second quarter, and it accelerated through the third and continues through the fourth. 2021 should give us a little bit better opportunity to kind of forecast where the marketplace is going. We also talk about high quality submission. Again, Allison has alluded to this earlier. What is a high quality submission? It's a submission that's complete, it's accurate, and it's timely. It should include your trainings and safety information. Submit it early. We should be working with you in the marketplace 60 days in advance of your renewal. Most carriers, as much as we press, will not release premiums 30 days or earlier, but we can, at the 60-day point, have conversations and really delve into the things that you're doing with regard to your company. Work with carriers who are committed to your industry. It doesn't do you any good to go to 15 carriers. A third of them will probably decline out of hand. A lot of times the carriers will ask us, how many companies are you going to? If they don't understand your industry and you have some losses, they'll decline for loss experience. A company that is committed to your industry knows the type of losses you're going to have, and they may have a different eye towards those claims and be more committed to offering your quote. Obviously, work with a broker who understands your industry. We fully understand that this market is about price and trying to manage it. But coverage is important, and don't sacrifice coverage for price. Understand what coverages you have and what coverages are being offered by a competitive program. And working with a broker who understands your industry, that makes it that much easier. And certainly, last but not least, if at all possible, meet with your carrier representatives. We've had situations in the past where carriers wanted to get off of risk. We orchestrated management meetings between the insured and the carrier, and many times the carriers decide to stay on because they've shared their risk management plans, they've shared financial information in the business plan. Currently, COVID actually, again, as we talked earlier, is very important. Be more than a policy number and a name to your insurance carrier. Let them understand who you are, what you're trying to accomplish, and how you're trying to accomplish it. Again, we understand that this information is difficult. We're here to help you guide through this period in time. To the clients around this call, we are very much glad to be partners with you.
The impact of COVID long-term is relatively unknown, but in the short term, utilization has been down for 2020, primarily because most elective surgeries and diagnostic treatments and care have been postponed. That's good news and bad news. It does impact for a fully insured client. You should expect a large medical loss ratio reimbursement check back from the insurance carrier. However, the industry does expect utilization to increase by 10% next year for people catching up. One interesting note, when we look at diagnostic testing that was postponed in 2020 because of COVID, breast cancer diagnosis was down by 52%. That doesn't necessarily mean there's 52% less breast cancer. It means 52% of the population with breast cancer wasn't diagnosed in 2020. And that could have a long-term impact on the rate increases as those folks go out and get tested in 2021 and then begin delayed treatment. The second piece of this is for furloughed, laid off people. Really the sickest of those long-term unemployed people are going to remain on your COBRA and drive up claims simply because they need the coverage. Analyst estimates are all over the place regarding what the long-term impact of COVID-19 is going to have on your premiums, both in the short term next year in 2021 and then long term. But analysts are predicting as high as 40% rate increases. And we have anecdotally seen clients with similar rate increases expected for January 1st renewals. One of the positives coming out of COVID is that benefit technology has rapidly increased. Telemedicine, for example, has seen a significant advancement and a significant spike. It has been around for a couple of years, but utilization has been a little bit low. And this year we've seen that adopted by most employers and employees as a low cost access to treatment. Second thing is, how did COVID impact the healthcare market, the healthcare providers? I had the opportunity to sit in on webinars hosted by two of the main Hackensack network hospital networks in the state, RWJ Barnabas and Hackensack Meridian. Both reported similar numbers. I'm showing here the RWJ Barnabas numbers, but Hackensack Meridian reflected the same thing. So we've been recommending when appropriate for clients to consider self-funding. The insurance market themselves have been developing very reliable plans to self-insure as low as 5 employees through level funding with both Aetna and Cigna, and then mid-size employers with, say, 50 employees to 250 employees. You can join a captive, which allows you to pool your stop-loss insurance, which helps you spread the risk around with other similar size organizations, and you can help bulk purchase things to help wellness programs and other types of things to help you keep your costs down as well. And as I mentioned before, having a good benefits administration tool, which has really accelerated in use during COVID-19 when most people were working from home and needed to renew their health benefits and pick a plan, we're able to put that online. And what that helps do is really make an employee have better decision making, see their plans, it walks them through it, it gives them options and shows them price variations on the plans that they're selecting. We'd be happy to answer any questions directly related to your medical insurance, but we're also, again, we'll open it up to any questions for the entire panel regarding what was presented today. And thank you very much for your time. I know today is a busy time for everybody, so we appreciate you spending the last 45 minutes with us.